All right, good morning, good afternoon, good evening, wherever you are, whether you're watching on video or if you're on the podcast. Thank you for joining us for Playbook of the Wealthy. My name is Dave Grant. My co-host is Heather Townsend. We're talking about what you do to set your kids up financially and how much responsibility to give them in their current age range. So disclaimers first. All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. The podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast. If this is your first time here, this podcast is set up into 4 sections. We get deep into material, we answer questions, you get to know more about us. But the first section, dedicated to one of the best sitcom characters in the world of TV, Joey Tribbiani, it's called How You Doing? And this is where we touch on our professional highlights. So, Heather, how you doing?
I'm doing great. I just finished a financial plan and reviewed it with probably one of the highest net worth clients I've had to date. We ended early. Like they were happy, very happy, loved the plan, but least amount of questions, right? It's just always so fascinating.
So you're saying the more money you have, the least questions there are?
Yes. They didn't have a lot of questions. They were like, yeah, seems great. And then we talked about bank accounts. It was kind of funny.
The small problems.
Yeah.
Well, good.
Yeah. So I'm doing great. And I wrote, I'm following my who, not how. I'm writing my job description for my client service specialist. So I feel like there is spaciousness coming. I'm excited. And I should say, I'm really excited for this episode. Everyone, Dave is not as excited for this episode.
Shut up.
Yeah. He's like, this isn't as technical.
Oh, way to take our off-air conversations on air. Thanks a lot.
Hey.
Anyway.
Yeah. Okay. How are you doing?
Getting that spaciousness, though.
Thanks. Yeah.
How am I doing? I am in that space where I'm starting to realize I can't do it all myself. And I thought I would always be just a solo of it's just me, myself, and I, and it'll be okay. But the amount of forms and paperwork that I have to fill out and then go back to Schwab and talk to them about, I need someone to do that for me. And social media scheduling, I can't do anymore. So I'm not hiring people, I'm hiring, virtual assistants to come in and just do that work for me. So this week has been interviewing various different companies because there's a lot in the financial advisor space. So hopefully we'll narrow down on one soon and I can get some headspace back.
You ready to dive in on setting kids up?
Let's dive in.
Yeah.
Yes, let's go.
Okay. So I want to talk about what we are doing, what our clients are doing to set kids up financially. How are they giving? What are they doing? So there's many ways that this can be done that we've probably seen. The most probably common ones are 529s, UGMAs, Roth IRAs for kids. And then there's, of course, when you get really high net worth business owners, there might be a multifamily LLC setup, partnership. You just told me, you just saw this. Tell me about that really quick. I loved that one. They gave right before the company goes public, where it's worth nothing. They're giving it to the kids, right? So the shares are really low value.
Yeah. So it's a case of if you are taking a company public and you are thinking about you want to share the wealth with the family before the company goes public, you give the private shares and share them out amongst the family with a assumed value of what that's going to be once the company goes public. And so at that point, everyone has their wealth. You still have yours. If they, sell their shares, they pay the taxes and you don't have to.
Let's talk about more of the common ones. All right. So 529s, a lot of people know those. Saving for college, change in laws a few years ago, don't remember when, can also pay that money towards K through 12 schooling. But mostly people use it for college. And I would say my clients have varying feelings on 529s. I think everyone has varying feelings on 529s. There's been a new rule in Secure Act 2.0 that makes it a little more exciting because everyone's fear is, what if you have too much left in 529s, right? Like what if the kids don't go to school? That happens sometimes. Well, now you can transfer, if the 529 is 15 years old, you can transfer up to 35,000 to a Roth IRA for kids. So that makes some of my clients feel better knowing that's in the back pocket. But generally, I advise that don't overfund 529s. I hear older financial advisors that tell me stories where they're like, I have so many clients that have these 529s that have money left over and we don't know what to do with it. So then there's the UGMAs. UTMAs, I think it depends on the state what they're called, but brokerage accounts, just regular investment accounts for kids. That one's an interesting one to me because at least in Arizona, they have full control at the age of 21, like full control. And what I always say to my clients is, I'm like, at the age of 21, I should have not been gifted this amount of money. So and sure, there is the thing of you cannot tell your kid about the account, but if they find out about it, you're kind of screwed. And if the kid is not in, let's say, adulting phase yet, they might still be in fun phase, which is fine. But in Illinois, what's the age? Is it 21 too?
It is 21. I've seen someone have an UGMA account who was 27 and the parents still had it. And they're like, are you telling the kid about this? I'm like, no, they're not ready for the money yet. I'm like, they've been paying the taxes on it. They're independent. They know this account is here. It was just that awkward moment of, this is your child who's now a grown adult. Can you give them the money now, please?
And legally it is theirs. Like if they could call Schwab and take it out, it's theirs after the age of 21. So like for mine, one of my clients, when the client each reached age 21, they halted trading on the account until it actually got put in the client. They restricted it until it actually switched to out of the UTMA into the client,
interesting,
into the kid's name. So what my clients are doing with the UGMA situation, most of them is we're just setting up brokerage accounts in the parents' names, but they're for the kids' extra college or for it's earmarked for wedding or future down payment or whatever, but it's not in the kid's name because they want to control when they give it. My favorite one is my business owner clients. We're paying the kids. We are paying the kids and doing custodial Roth IRAs for them at really young. Now, I would say my business owner clients' kids are of reasonable age to have a job, meaning they're not like 4 or 5, they're teenagers. But the beauty of this is they get to deduct. It's a standard deduction, right, today. So the kids don't pay taxes on this money because it's below the standard deduction. The business owner gets to deduct, and there's no FICA, like no Social Security and Medicare taxes on these wages. It's like brilliant. And then because the kids don't really know they're getting paid, we just pull that money and put it in a Roth IRA for them. Wouldn't you have loved your parents to start a Roth IRA for you when you were like 15?
We're all from England, so no, that would have been illegal.
You're such a buzzkill. But come on, if it was like, yeah. My best friend, her parents did it for her, and she is way ahead of me in retirement savings.
Oh, that's cool. My 14-year-old has an advanced sense of money. He had like a bank account with like $3,000 in from savings, and being an umpire, he's 14 now. He then turned around and said, can I have all that money? And I'm like, where is this going? What do you want to buy? It's like, no, I want to open up a brokerage account. I'm like, oh, okay, sure. Let's do. And then I got excited. And I'm like, let's do this. We didn't go the Roth IRA route because I wanted some flexibility with the money of what he was going to do with it. And then he didn't have enough earnings to put all of that in the Roth IRA. So it was a weird situation. And then I'm like, okay, let's take this slow. Like, do you want to pick a couple stocks that you're interested in and you buy those and you track them and then you see what's going on? He's like, Dad, that's not diversified. Why would I do that? And that just makes my heart sing. I'm like, okay, what do you want to do? He's like, S&P 500. And by the way, have you seen Facebook stock? I should have bought that 6 months ago. I'm like, all right, day trader, relax.
Wait, how does he know this? Are you teaching him, or is he watching TikTok? Like, what? How does he know this?
It's a bit of both. Like, we talk about it randomly, but then his YouTube went from being Fortnite videos to sport and fitness and finance videos as a 14-year-old. And I'm looking at him across the room. I'm like, I'm very proud, but relax, nerd. Like, go back to Fortnite, enjoy being a child, because you have your whole life to do this. And you do not need to be counting your macros at 14. Like, chill out.
That's incredible.
But he's gained a lot of money, so kudos to him.
Yeah, that's amazing. You know what? This goes back to, and I think it's like no surprise that where I am today, but in 5th grade, there was an extracurricular class where I could like play stock picking. I remember I picked Safeway because I loved going to the grocery store as a kid. Now, I don't think my stock did very well, but like the fact that I remember that, like we like picked how much money, it was like Monopoly money, and like tracked the stock, how it did throughout like whatever this after school activity. And I still remember that memory today. Like I don't remember much from 5th grade, but I remember that. And I find that really interesting.
It is right around the age where the people who are interested in finance get the bug and start, listening, even though they might not be listening all the time, but, they're interested in, well, what's a stock? What does a stock do? My 12-year-old doesn't care. I'm like, dude, it's Saturday. Do you want your allowance? He's like, whatever. I'm like, it's $5 on the table in your hand if you want it. It's free money. Like, you're going to buy it for me anyway if I ask you for it. So if it's my money or it's coming out of your pocket, I don't care. I'm like, can you just like sit with your brother for a little bit and learn? But so it's like two different people in the house.
Yeah, but that's what's fascinating. Like, I think some people are motivated by money and some people aren't, right? Like, that's what makes the world go around. And that goes back to the thing I wanted to ask you, because your kids are of allowance age. Mine are not. 3.5-year-olds are not getting allowance. So you are giving your kids allowance.
I have done. If they are not able to work, then I will give them a $5 per week allowance.
$5 per week?
Mm-hmm.
What can you buy today for $5, Dave?
But that's not the point of the $5. The $5 is... Hey, what up, shaming? Thanks. So the $5 actually gets split up. So they have to take $1 and put it in a give jar. And so they will give that to a charity. Another $1 goes in a save jar. Actually, I think it's $2 goes in the save jar and the rest goes in the spend jar. So the money amount isn't the important part. The important part is that they learn to start splitting it up, knowing that, yes, I'll need to spend it, but I also need to prioritize saving and giving. And so they have like mason jars in their room with dollar bills in each.
I'm going to do that.
So my 14-year-old doesn't get that anymore. Like, he's been umpiring. He is almost of age where he can get a work permit, and he's ready to work and earn a lot of money in his free time. The younger one doesn't care for money that much, but he cares that it's in my pocket so he can go buy expensive shoes, which is something that is a problem I have and have now passed on to him, except I earn money and he does not.
Oh, so but that's a good lesson, though. Isn't that why you're trying to teach him to like save so that he can buy his expensive shoes?
Yeah. And he'll say, I'll do half. And if you guys want to do half, I'm like, we kind of need to, because I'm not spending that amount of money on shoes for you. Wait,
but at $5 a week, how can he buy expensive shoes, Dave? This is what I mean.
So how much, if your girls were 15, how much allowance would you be giving them per week?
Okay, so this is where I'm actually torn that I want to get your thought on. Okay. I've been watching on socials recently that people say don't give allowance. Like, don't give allowance for chores that already need to be done around the house. Do give allowance or teach them how to go make their own money. Like go set up a lemonade stand or go like the things around the house should need to be done. I don't know if I'm all the way there because I actually like loved helping my mom out around the house, or like when they would have dinner parties, I was really smart and I knew that if I made them look good in front of their friends and did all the dishes, I would get a reward later. So I kind of like it worked. I mean, I'm semi-successful, I'd say. So whatever that strategy of getting money for doing work did work. So I don't know where I'm going to land on allowance, but I found that interesting. I think I will definitely pay a lot for grades though, because that's similar to, I feel like, I don't know, working in the workforce, except I know what's going to happen because the world and universe gives this to me. One of my kids is just not going to be good in school. And that doesn't mean that they're not going to be successful in life, right? So that's going to throw me a curveball. So TBD on this. I don't know. I'm open and still learning.
That's an interesting perspective. So I'm married to a teacher. The highest grades that you can get with maximum effort is a minimum requirement in our house. If you're getting lower than a B, that's not acceptable. You will do tutoring. You will go redo tests as much as you can. You'll do extra credit, and you will get A's and B's in your classes.
Okay.
And there's no financial reward. That's just an expectation.
Okay, I get that.
Same with helping around the house. There's sometimes money in it if you are asked to go above and beyond. Like I hurt my back recently, so I asked my 12-year-old to go rake the backyard. I'm like, if you do that, there's $20 in it for you. And he's like, I don't want to do it. I'm like, great, then you're going to go do it for free. And he's like, whoa, hold on. I'm either doing it for free or for $20. I'm like, yep, you choose. I'm like, fine, $20. But the expectation is you help in the house that you live in. I was raised differently. I gave a heck of a lot of attitude in my house because I was the oldest and my brother was 8 years younger. So there was a little bit of a split. So the line that I remember, and I'm surprised I got away with, is my dad wanted to resod our whole backyard, like dig up all the dirt and put new grass down. He then asked for my help, and I was like, it's not my yard, it's yours. And I just walked away. I still to this day don't know how I got away with that.
You turned out all right. It's making me feel better because I know I'm going to have all of these things. Okay. So I will say, I think the leaning in though is like some kids aren't going to love finances. I think it's, but I like the allowance. I want to do the 20% give, 30% save, 50% spend with whatever money they get in the allowance or the way that they earn. I want to teach that because no matter what someone is good at, they're going to have to earn in the lifetime. And I think that they need to understand budgeting and the feeling of how it feels to give. It makes you feel wealthier. It's an amazing feeling. All right. So tell me really quick and then I'll share. What are you doing for your kids? Like all in, 529s, whole thing. What are you doing?
Okay. So 529s we've been saving since they were born for college. The goal is roughly 4-year undergrad degree at a public school. We're going to pay for all of it. So we're looking at, 100 to 120 grand. If you get scholarships and there's some left over, fantastic. Go get a master's degree, or we'll save it for your kids as well. Like we'll just change the beneficiaries at the end. But if you go to a private school and it's going to cost 250 grand, cool. I'm not paying for that. I'm paying that 100 to 120 that we originally discussed as a husband and wife that will pay for school.
Okay.
So it's in Illinois plans where we are from. We get a tax deduction up to 20 grand. I believe we are doing 10 across the kids, so it's 5 each. That gets us to our 120 by the time they're done with school. And so we get a nice tax deduction there. Boys, if they're not working, they get an allowance. If they are working, then they get to keep their whole paycheck, but they are encouraged to save it and give it as well as spend it. I actively encourage them to spend their money because I don't want children who are hoarders. Yes, save it, but yes, give it, and yes, spend it. You got to have that balance of all three.
I was the hoarder, and then I got a BMW and a dog before the age of 18.
Yeah. Yeah, I'm the spender in our house, so I have to encourage children to save. And then my wife looks at me like, oh, where did that other pair of shoes come from that you just put in our room? I'm like, they're going to spend money too. They're going to be like me. And then my wife is very much the saver.
Oh, that's funny. Not you. All right. Yeah, we should say that.
What about
States,
you?
if you are setting up 529 plans for kids, look into your state rules because states give tax credits. They give tax deductions. And sometimes, depending on the state, you have to be in the state 529 plan to get the tax credits. In Arizona, for example, you can be in any 529 plan to get the 4,000 deduction per kid. But I know for some states, I think like California, for example, I think you have to be in the California. I don't know. I haven't looked at the California 529, but I think maybe in Minnesota you do. There's a few states where you have to be in the state specific 529 to get the tax benefits for the state. So make sure you look for that. So for me, I'm very similar. Like state schools, we're putting in 529s. I don't want extra. I front loaded when they were born. I think I put 10 and 10 in their 529s. And now I'm kind of just doing that for Arizona tax deduction every year because with investment returns and stuff, we're ahead. Mm-hmm. I think 120 is kind of my number to get to. But, you know, my husband and I right now are trying to put as much in our brokerage as possible now because it's kind of the game of like, if Sloan or Sophia gets into Harvard, I'm going to pay for that education. I know I'm going to. I know that is like a needle in a haystack, but I also am very aware of myself. So yeah, our plan is to definitely pay for their school. I am very grateful I didn't come out with student loan debt, but it is, I mean, watching clients, it's harder when you start out with student loan debt than not having it. And it's a serious problem today. So I am grateful that we can be in that situation. And then honestly, if they don't end up going to college because it changes, I'm not too scared of the 529 penalties. It's not that bad. If you really think of it, I had some clients that are in financial freedom. They had some 529 left over. You pay a 10% penalty on the earnings and taxes on the earnings. So you pay taxes on the earnings anyways, like if you take out of a traditional IRA, right? So that's not very bad, or on the whole thing. So it's just the earnings and then a 10% penalty. I don't think it's that bad. It's not to the point that I'm worried about having money in there and not using it. And now with the 35,000 a Roth IRA, I don't know. I'm not too concerned.
I agree with you. I think I'm always talking to older clients who are having that money that's just sat around after their kids. I'm like, you realize you can change this back to yourself if you want to go and do some, schooling at community college to get a new skill. Or as soon as that grandkid arrives, just change the beneficiary to the grandkid. Yeah. Well, like 529s are one of the most flexible accounts that you can change it to whoever you want it to be, as long as it's within a family lineage. So
it's what the wealthy do. They like literally fill those things up so that they can just gift it around to the whole family.
All right. This is the new segment called What Would You Do? So first question, my wife and I have saved $150,000 in our 7-year-old daughter's 529 plan from gifts from our grandparents, and we expect they will probably continue to come, but we can't count on it. Should we start using the 529 funds for K through 12 or wait for college?
I mean, I would say if this family is struggling and they need, like, cash is really tight, I'd probably encourage them to use some for K through 12. Like leave 100 in there. Maybe use like 50 of it.
Yeah, a lot of it's going to depend on what K through 12 is going to be, because I know that varies wildly across the country.
Yeah, private school.
And so when we're talking about K through 12, we're talking about private tuition here in a private school. Obviously public is, going to really have any fees. So what is private school? Is that $20,000 a year? Is that $40,000 a year? If your 7-year-old, who's going to be in what, 2nd or 3rd grade? Am I thinking that right? That's a lot of K through 12 left. So you might not be able to use all of that money and have money left over for college. Again, it depends on what the K through 12 tuition is.
Yeah. That's
But
why I'd
if
say
there's still
like,
going to be gifts coming in, then there may be some left.
that's why I'd like probably look at this if they were my clients and I'd be like, let's set a hard, we never want the account right now to go below X amount so that we have enough for college, right? We run those projections. And so, I mean, this is me just spitballing based on how many projections we've done, but like I would imagine, you know, they probably have some 50K wiggle room there right now. And then we can reassess if another future gift comes, right? But we probably want to at least keep 100,000 there.
Right.
Maybe even go down to 75. But you know, they're in a I think they have some space to use it for K through 12 to answer their question.
Yeah, the interesting thing comes up. If you do a private K through 12, does that expectation continue through college where you're now expected to do a private college?
I have no idea. I don't have kids in this arena yet. I didn't go to private school either, so I don't know. This is out of my realm.
Me neither. None of my family has really touched private school. We've all done public and public college. So it's...
I would imagine yes. I would imagine yes. I think it depends though. Like in Arizona, our school system is rated, I don't know if you know this, but like the bottom. I think the recent one is 50, okay? 50. So, you know, I didn't want to send my kids to private school, but it's looking very likely that this might happen. But I mean, I think it's just to get a good education. It's not, so, you know, does that mean that because I send them to private school that I expect my kids to go to some Ivy League? No, I'd be fine if they went to ASU or NAU or U of A, right? So I think it depends. All right. Second question. The company I founded went public with my share being 47 million. Nice. My kids are set up to inherit a large amount of money where they never have to worry about money. Yes. How do I prepare my kids to manage money responsibly? How do I ensure they appreciate the opportunities they have? That's a really good question. So I definitely give this person the book Preparing Heirs that I was given. And I mean, you and I have discussed this. I would bring the kids in on this conversation. I mean, we don't know how old the kids are, but when it's reasonable, let's say high school age, I'd start bringing my kids into these conversations about money. Definitely college. I'd have family meetings about money, not around the holidays, like a separate family meeting. I'd have a family mission statement. I would really get into the details on this one and really involve the kids. You know, in the book, Preparing Heirs, it talks about even like the kids' involvement in the money, and then they get like a salary based on their involvement. And if they get more responsibilities, they get more money. And appreciating the opportunities, I mean, I think that's like parenting. I mean, that's the hard part about parenting, right? Like I was talking to my friend about this and she was so worried that she took they're pretty well off. She was so worried that she took her daughter to a really nice restaurant for her birthday. And this daughter's probably 6 and it was a really, really fancy dinner. And I'm like, you know, I don't think that's what you should be worried about. Because I went to fancy dinners when I was a girl and experiences. I think it's the things. For me, I find that if you just give your kids whatever they want, whenever they want it, and they have no concept of money, that's where it gets dangerous. And so
I agree.
And same with experiences, right? If you don't have the discussion of, okay, but it costs this much, or okay, if we do this, we might not be able to do this, or just saying yes to everything without giving them any concept of money. I think that's dangerous.
Yeah, I think there's a lot of things here. Like one, yes, you're talking about parenting on how you prepare your kids to have money responsibly. That, in my eyes, should happen regardless of how much money you have. So if you've got 47 million, or if you've got $47, you should be having conversations with your kids about money and how to be responsible with it. But now you're talking about a huge lifestyle change. Like if you're getting $47 million, you're not going to Chuck E. Cheese for the next birthday. potentially, because now you can afford to do something that's a little bit nicer. That doesn't necessarily mean better, because if you have no friends to take to your birthday party, that's going to suck. If you had a ton of friends going to Chuck E. Cheese, that's going to be awesome. So money is not everything here. I'm kind of a hard ass when it comes to this. If I was the person and it was, the company went public, I would sit my kids down and say, me and your mom just got a huge amount of money. Just a reminder, you have nothing. You haven't got a job yet. So I'm going to share my money with you. And here's what we're going to do. But I'd like your input.
I think that's valid. I think you do have to lean in who the kids are. If they're not motivated, probably not a good thing to share that. That's not going to make them more motivated. But everything that I read, bringing them into the conversations of money, the family money, but not giving it. You don't just give it away. That's like that's where everything goes down. There's something tied to it. But also I've seen the really dark side of money too, especially with my dad's side of family, where my dad was controlled by his mom with money. And I've seen it with other families too. And that's not what you want to do either, because then that causes a whole nother slew of, you don't want to be like the ultimatum, dangle the carrot. If you don't do this, I'm not going to give you this. Like that then creates a very bad relationship with money. But I would bring them in.
Is it different with ages? Like if you're a 60-year-old parent, because there was no ages mentioned in this.
Mm-hmm.
So if you were a 60-year-old and the company went public and you got 47 million and your kids are 40, 35, that's almost we need to have a family conversation with this, because, okay, my kids have graduated school, they've got a job, they know how a job works, they've potentially got a family. There's probably, decent amount of generations. Versus if you were 35 and you've got small kids and the company went public, there's probably not a lot you need to do yet. Your kids are not in that space where they're understanding money. They may not even remember the trips you go on when they're older. So now it's just a place, let's just have fun with a little bit extra of what we're doing. And then we'll just start to pepper in those conversations as we get older.
My son received a full ride scholarship to his college of choice. Awesome. However, I have $75,000 saved in his 529. What do I do with it? Okay, well, for our listeners, there's a special scholarship rule. So if your kid gets a scholarship, there's no 10% penalty if you withdraw it. You do have to pay taxes on the earnings still, so whatever the 529 earned from your contributions, but there's no 10% penalty. I mean, questions, right? These are the things I would consider. Do you want to save it for your grandkids, right? Do you think your kids are going to have kids? Do you want to give it to your grandkids? Do you need it? Are you short on retirement? So maybe you use that, invest that elsewhere. Do you want to go back to school? I also like the game of like, there's things that scholarship doesn't pay for that 529 is allowed, like off student housing or not off school housing. I'm saying this weird, but like as long as it's within the realm of what school housing is, you can use 529 money for textbooks, computers, like supplies. I don't know. I don't receive a scholarship except like a tiny one, like $1,000. So I don't really know what's all in. I didn't get any full ride. So I don't know what's in there, but from the reading I've done, there's sometimes like specialty courses that aren't covered in a full ride. So maybe keep a little bit aside and wait to see how school goes. What if your kid hates the school too? I've heard crazy things like that. You don't know. I don't know if I'd pull it until they're fully done with school, to be honest.
I would agree with that last point. Like, I would just leave it until they're done. Sometimes study abroad programs are covered in a scholarship. Sometimes they're not.
True.
And so if you want to do that full cool experience of, okay, let's do your study abroad and hey, here's a little bit extra. Go have a cool time versus have a miserly time. That's when it can come in fun. But yeah, I'd agree. I would not be pulling that money out, even though you can, based on the scholarship. I would leave it there until they're done with school and then have that conversation of, are you going to do a master's degree? Do you need this money? Do you want me to leave it there for your kids? It's that interesting conversation of, yes, we've saved up this money. Now we don't need it. Don't do a knee-jerk reaction of ripping that money out.
Let's go on to highlights. I think it's time we start wrapping up.
All right. You want to go through with your personal win of the week?
I'll go first today. So my best friend was here last weekend. And I didn't work for like the first weekend in a long time. Like, I really took the full weekend off. And it was just really nice. I am really lucky to have that best friend that is truly like, if there was a soulmate of a best friend, I have that soulmate of a best friend. Like, we analyze. My husband came out one time and he was like, how do you guys still have stuff to talk about? You never stop talking. Like, we analyze everything. We know everything that's going on in each other's lives. Like, I save up my dilemmas. She calls them, like, I always have a dilemma when she comes to town. And we solve the dilemma. Like, I love it. I love it.
That's cool. It's nice to get some time off. As being fun time, not mom time or wife time. It's let me just go do me time.
Mm-hmm. Yeah, it's really nice. What's your personal win of the week?
Personal win. We had a milestone in our house this week. Braces came off, the eldest. So it was the funny thing. He had a great time. She's like, yeah, look at my smile. And I'm like, yes, thank you for giving me my calendar back so I don't have to pick you up at lunch to go to the orthodontist and take an hour and a half out of my day. I appreciate you so much.
I remember going to the orthodontist so many times. Oh, wait, so braces are still around? They're not Invisalign anymore? Like, I was wondering that. I was like, are my kids, is it just dependent on how bad your teeth are, whether you go braces or Invisalign? I always wondered that.
It's the cost as well. Invisalign's more expensive. And their kids, all of them in school have metal braces where we are. So it's almost that rite of passage of, yeah, you're in middle school, get some metal work on your teeth. And then when you get out of middle school, cool. Well, sometimes it's really young. Some of these kids are out of braces by middle school. My son's a freshman. He was one of the last ones to get his braces off.
I was too. So here's my question. Did he get them off on time or early or late?
This is the oldest. He got his off early because he was religious about rubber bands and not eating food he wasn't allowed to. He's the rule follower.
The younger one is not. I already know from this conversation. The youngest is not.
I caught the youngest walking around with Swedish fish and popcorn in his hand the other day. And I'm like, what are you doing? He's like, what? Shut up. Sorry. All right. Awesome. Well, thank you for listening to this episode of Playbook of the Wealthy. You can find us on whichever platform you listen to podcasts, and the video version of the show is on YouTube, Instagram, TikTok, and LinkedIn. If you want to send an email to the show, please do, because Heather wants you to. You can contact us at hello@playbookotw.com. And we'll see you next time.
I really like questions. I'm going to keep saying this every time. Send them in. I love them. Okay. Bye.